Welcome all of you. Today in this episode, we'll take up as part of corporate tax planning the issues relating to TDS, the tax deduction at source. The TDS is definitely a very wide area, but before that let's understand what is TDS and then what are the areas where TDS is applicable, how it is applicable, who is responsible, when the responsibility comes out, what type of income or what type of payment, is it on an income approach or it is on a payment approach, what is the timeline for deduction and deposit, what is the timeline for filing of a return, is there a penalty measure, if there is a default then who will be held responsible, and ultimately the tax being deducted by the deductor, how the deductee is going to get the credit thereof. And this one, we will be taking this syllabus into two particular sessions, consecutive sessions, one after one. And to start with today, let's understand the concept of TDS and then go ahead with the sections that are given into this particular provisions of the Act. To start with, every salaried employee who is the employee of any organization getting an income from salary is required to deduct, means the employer is required to deduct tax at source from the payment to be made to the employee concerned. Let me repeat it once again. You are an employee, I am an employee of my organization. The organization who pays me salary, it also imposes a responsibility to say that the tax on that salary need to be deducted and on an equal proportionate method, that means on an equally spread over method or manner by the employer when he or she is paying to the employee concerned. Section 192. The section also empowers the employer to consider the other income, like income from interest, income from house property. If the employee concerned declares such income to the employer can take those income as part of the total income of the employee, and as a part of the total income of the employee can calculate the tax, deduct every month, my friends, once again, deduct every month, deposit to the government account, and at the year end gives a certificate called as Form 16 to the employee and submit a return to the government of India, right, in a particular form. These forms and procedures will take care of in the next session. So first part, section 192, which deals with tax deduction at source where the income is from salary. Certain other deductions are also allowable. Certain other deductions like certain donation, not all donations, certain donations where the employer is empowered by a notification by the Central Board of Direct Taxes that if an employee, right, contribute to such donation, Prime Minister donation, Prime Minister National Relief Fund, President of India's National Relief Fund, etc., which has been notified by CBDT, the employer should take into consideration those areas also while determining the amount of tax liability of the employee and then deduct tax thereof. Once 192 is over, just a conception, once 192 is over, let's come to the payment side. So 192 is a payment by the employer to the employee, income of the employee. Now we are coming to the other side, which is very, very important, and it's an extremely big task for the organizations to maintain it. Section 194C. 194C, capital C. It says deduction of tax from works contract, deduction of tax from works contract. And what is deduction of tax from works contract or on a job, on a works contract? The 194 says is very precise. It says if there is a job being awarded, whether there is a job being awarded or not, and that means it is a TDS. It is a TDS for the payment to the contractor and subcontractor. So first let us understand what is that job, what is that work. The work has been defined. The work has been defined in a way that whenever certain activity is outsourced, so in my organization, say the housekeeping has been outsourced, the maintenance of computers and refrigerator or air conditioners, that has been outsourced, called as AMC, annual maintenance contract. And certain other job like a construction of a outer wall or repair and maintenance of my building, these are all taking place, and for which I have engaged a contractor. So when a contractor has been engaged, an amount, certain amount is payable to that contractor. The law emphasizes, the law says that if a contractor has been engaged, you need to deduct tax at a particular rate while making payment to the contractor. The moment we deduct, it becomes a responsibility of the deductor to deduct taxes. Two immediate responsibility comes out. Responsibility number one, deposit the amount immediately on the next month, during next month, by 7th of the next month. And then responsibility number two, right, upload a quarterly return. April, May, June, you upload a quarterly return to the Government of India, and once the return is uploaded, the tax deducted from one particular contractor shall be shown in his account, as a tax deposited in advance by me. That's called 194C. Now, what is the rate applicable? The rate applicable if the recipient is an individual or HUF. If the recipient, that means I have given a contract for an AMC and the recipient is an individual or HUF, then the applicable rate of tax is 1%. If it is a company, a cooperative or a partnership or any other than an individual and HUF, then it is 2%. Now, a precise interesting question that comes out, very interesting issues that come out, that certain job has been awarded to a contractor, and the contractor for execution of the job purchased something on my behalf and claimed a reimbursement thereof. That means to say for the purpose of this contract, he purchased some stamp paper on my name. Who am I? I engaged that contractor. So he purchased certain court paper or stamp paper where the papers has been purchased in my name, and he is claiming a reimbursement of such expenditure. Should that reimbursement be also chargeable to TDS? There was a very old circular of circular number 715. There are a number of board circulars, number of such clarification circulars have been given. So I am not going into the details, into the nitty-gritties, but the circular said that the tax to be deducted on the total amount payable to the contractor, and the total amount, if it includes this reimbursement, this also should be covered. So it becomes a very controversial issue. Whether reimbursement wherein he has not provided any job or any service, should that be also chargeable to TDS? Further clarification was provided. Certain judgments of the high courts are there, but if the reimbursement forming part of the gross total bill without demarcation, then tax has to be deducted on that also. If the contractor sublets a job to a subcontractor, tax is also to be deducted. The rate is applicable is 1%. In that case, it becomes 1%. The second most important, the TDS sections. There are a number of sections and all are equally important. The second one, which is in order very important, is called TDS or tax deduction at source on the professional and technical services, on the professional and technical services, right, on the technical services fees for technical and professional services. The section relevant is 194J. And what this section says? This section says that whenever a payment has been or is going to be made, or whenever a technically qualified person has been engaged to provide a technical or professional services. For example, a chartered accountant has been hired, a cost accountant has been hired, right? Or an architect, engineer has been engaged for what? For doing certain services, for providing certain services, whether audit or technical service or something that like. When the payment is to be made to such person, that amount is also chargeable to TDS. That amount is also chargeable to TDS. And the law says that the payer, that means the person who has engaged those professionals towards providing fees for professional and technical services, while paying these fees, the tax to be deducted at origin. That's why the subject called as TDS, tax deduction at source. What is the rate? The rate is 10%, and there is also a threshold limit. This threshold limit says that if the amount does not exceed 30,000, you need not deduct a tax. That means one standalone small audit or a small certification by an architect is made, and he or she placed a bill for say 10,000 in the entire year, for entire year only one bill. No question of TDS because it falls below the threshold limit. But the board, the income tax department made it also very clear that if there are collective payment, there are multiple payments by the employer, by this contractor to such professionals, and all this payment put together exceeds the limit, then you need to deduct the tax from the very beginning one. There may be some clarification. There are certain clarifications also that first bill was only for 5,000, no tax was deducted. Next bill is for 30,000, but total together is 5 plus 30, 35 tax to be deducted on not only on 30 on the second bill, but on 35. Total together the tax has to be deducted. And the last one for today that we are going to discuss is the deduction on tax on the commission or brokerage. Because a lot of businesses are carried on the commission basis, right, on a brokerage basis. Certain insurance business, certain shipping business, certain logistics business, cargo haulage business, airlines business, lot of business carried out in our country, across the world also, on a commission or on a brokerage basis. And all these cases, section 194H is applicable. 194H is applicable. And this 194H, what it says very clearly, that tax to be deducted while making payment to the person who provided the service and getting an income in the nature of commission or brokerage. And the rate applicable on that, as on today, it was earlier 10%. Now from 2016, it has come down to 5%. Now, if we come to just cover up all the discussion we had in this particular session, tax deduction is a very important tool, very important area, because if I do not deduct tax, do not deposit the tax, deposit and do not issue the certificate to the party, do not upload the return, any of these activities individually is an penalizable item for me. And TDS is absolutely looked as an advance payment of tax. That means the company is paying taxes on my behalf in advance before actually I go for my advance tax calculation or filing the return. We have got host of other areas in TDS. Thanks everyone.